Welcome back to another episode of the TruTrade podcast. I wanted to introduce myself, Dan Ribello, and this is Brian Nutt. We're going to go ahead and go over the fundamentals of the prop trading and how it's so important and effective for you to start trading prop accounts if you are not already trading prop accounts.
Yeah, so today I want to cover prop because a lot of people just don't understand how prop accounts work and why they should be using prop. So the primary problem with trading is that most people don't have enough money. So if your account is too small, it doesn't matter what you're doing, you can't win. So what I mean by that is you can generate a profit, but not a big enough profit to justify the time, the risk and the amount of just about an hour it takes out of your life, right? Trading takes a lot of time done by hand. Obviously, TruTrade solves the I don't have any time, I don't have any skill problem, but it does not solve the I don't have any money problem. That's where prop comes in. So if you have less than 6 figures liquid, making money as a trader is almost impossible. You can make a profit, but it's not enough to pay the bills. You're going to get frustrated, you're going to over leverage, you're going to crash and burn, and just basically repeat the cycle over and over again. So in TruTrade, we tell you the truth of what it actually takes to be successful trading, and that's what we're going to cover today. So for those of you with less than, let's say, $250,000 liquid, you're not going to make any real money trading your own cash. We have like I said, we have the software now to cover the skill problem, right? I don't have time, I don't have the skills. Our software will take care of all that. So you pair prop accounts with our software, and that's basically the perfect storm. You now have technology trade on autopilot, and you have capital to make it worthwhile. So let's say you're averaging like 1% per week, right? And you have one person that's got $10,000, one's got $100,000, one's got $1 million in trading cash, right? 1% per week on $10,000 is $100. Unless you're sleeping under a bridge or, basically you can't do anything with that. It might pay your DoorDash bill. You've got $100,000 trading 1% to $1,000 a week. That'll help out with bills, but nothing to get too excited about, right? But here's where it gets good. Let's say you have $1 million in prop cash in play. 1% is $10,000 a week. That's life-changing money for almost everybody. You have $10 million in play, 1% is $100,000 a week. That's big money for basically anybody. So you can see that with just a small, safe, consistent, steady return on a large prop account balance of $1 million plus, you're making really good money. So you can have $10,000 of your own cash, average that 1% per week, make $100 a week, which is basically a waste of time, right? Or you do the exact same thing, but with $1 million in prop capital, and now you're making $500,000 a year. Let's say you compounded that, right? Let it just don't pull the money out, just keep letting it pile up and keep incrementally raising the leverage. You're pushing $800,000-900,000 your first year. That makes you a 1% income earner just off using prop accounts versus sitting there grinding away for years trying to make it up with your own cash.
Yeah, so, not just that, Brian. Too, it's also the emotional aspect as well. If you're trading $1 million or $2 million of somebody else's money, the emotional portion of that would be they'll be able to trade more consistently. They won't be as stressed when they're trading versus if somebody's using their own $100,000
attached.
Exactly. So they're able to trade more effectively emotionally, which is extremely important these days. It's just, it's very difficult to ebb and flow with the market when you're using specifically your own money and you don't have a lot of money to begin with.
Yeah, but this ties back into the earlier conversation, right? They're getting emotional because they're undercapitalized, which makes them over-leveraged by default, which creates that emotion. If you're watching your mortgage payment flash around on the screen, because that's all you know what I mean? If you can't afford to lose, you're going to be very nervous about it. You're not going to be able to control your emotions.
Yeah,
you're going to take losses too slowly, take profits too quickly, make all the wrong moves. So we have the software obviously to fix that problem. But like I was saying before, that's the whole thing. And then you have the other people that take prop accounts and do it the wrong way. Where they're like, okay, well it's not my money. Now I'm just going to go crazy and swing for the fences, and they get in that gambler plunger mode because it's not their money, right? So that's the wrong way to use prop. That's what the prop companies actually want. A lot of them is if you just keep paying the fees over and over again, you know who you are if we're talking to you, right? You've been using prop for years, haven't made it. Because here's the other thing too, trading with prop cash is harder than your own money, right? Trading's hard enough. Just clicking a mouse, we call mouse clicks anonymous, right? Like the old school way of click, 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 right? Just sitting there clicking all day, hoping something's going to happen. The markets move too fast now. That's why the automation and the AI optimization does all for you. So that's what we're trying to say. But you combine that with prop, and you have the perfect storm. So basically, what we're trying to convey today is that the smart way to play this game is to get high-end software, like the Ripple One AI that we sell, right? Get the appropriate version for your current financial situation, right? Once you have that, then pair it with the appropriate number of prop accounts, turn it on, let it do its thing. So it's going to manage risk appropriately, and it's going to trade in a way that allows you to get funded rapidly and stay funded, right? And we also have our quick fund services, which we can touch on now. So We have,
Brian, before we get into that real quick, sorry I wanted there's a lot of people I hear that actually don't know what prop accounts are. So maybe why don't we jump into real quick before you go into that?
The specifics of what
because a lot of people think it's fake money, it's not real. And there's those that don't even know what a prop account is.
So, I'll cover that. So basically what a prop account is, they act as your broker and your backer. So a prop account operates like a broker. It lets you trade fully on their capital, so sort of like 100% margin, right? And for that privilege, they take a cut off the top. So it may be 10%, 20%, 30% of your earnings they're going to take in exchange for allowing you to trade solely with their money. But obviously everybody wants to do that, but they can't just let any average Joe off the street trade their money and just lose all of it, right? They're out of business. So you have to have a way of actually qualifying who's competent and who isn't. So it's called a sim test or an evaluation or an eval, where you basically pay them real money to trade fake money to prove competency. So maybe like, let's say for example, with a typical 50K prop account, you got to make 2,000-3,000 without losing, 2,000-3,000 range within X amount of time, and you pass the test. So do that and you're in. But now that you got your foot in the door, you're able to place trades with their money. If you draw down too much, typically usually 3 to 5%, they'll pull the plug. You're out. Game over. Start all over again at the eval phase, right? So most people, and not on top of that, they have to also make money within the prop firm's rule set. Like for example, some make you trade every single day. Some make you have more losing days or more winning days than losing days, obviously. And certain ratios can only come from certain sessions. So there's a lot of other rules stacked on top of just making money, which makes prop harder than trading your own cash. But our software is good enough to get you funded quickly and keep you funded once we get you funded. So it solves that problem. Sitting there clicking a mouse makes it quite difficult to pass these prop evaluations, and even more difficult to stay funded once you get funded.
So for somebody that has, let's say, $500,000 in prop runs, so what do you say to those that are like, okay, what happens if I lose the $500,000 in prop funds?
Yeah, well, you can't actually. So
right.
Just say you have 500K. Let's say you have 10 50K prop accounts, for example, right? If you draw down typically 2 to 5%, depending on the prop firm, they're all a little bit different, then they're going to end that account. So even if you have a 50K prop account, they're not going to let you burn 50K. And nobody's loaning you $50,000. They're not putting it in your account. You're not paying interest. You're not liable for any losses. The max you can lose is what you paid for the data fees and for the eval fees. So typically it's only like a few $100s on a 50K account, right? In most cases. So you're not going to be like, I lost $5,000. I owe these guys $5K. That's not how it works. If that's how it worked, nobody would do it. Everybody's afraid to lose. They're all risk averse, right? So this is a way for you to come in. Like I said, TruTrade has a service called Quick Fund, where you pay us, we fund the accounts for you, money back guaranteed. The specific terms of the funding time and all that, it depends on the account and the broker, which you can discuss with our sales reps. But we have a money back guarantee that we can get you funded with most major prop firms fairly quickly, usually within 30 days or less.
Right.
Less than a week. So that's always on the table. That's an easy solution to get through that. Because people always ask, well, if I get funded, then what's the next step, right? So most prop firms, they pay you out anywhere between, every 2-week pay cycles are pretty common. Some you can pull the money out daily. Some of them require a certain profit threshold. They get to be up at X% on the account to be eligible for withdrawals. You can do an ACH or bank wire to your checking account. So it looks and feels like a regular brokerage account. You get 1099s at the end of the year. So it's like your typical broker. I'm not going to mention any names here, but you know what I'm talking about, right? If you've been trading for a while. So it doesn't look or feel any different than your typical mainstream broker. It's just that, one more thing. So for those of you that are watching this from the stock and options world, the mainstream media, you guys probably don't know like with futures, Forex are, stuff like that. So the prop firms have been a major player here for the last 5 years or so. And so they just have not permeated the futures, or excuse me, the stock and the options market, stuff like that. They're not like, so that's why most people have not heard of this yet. But if you've been trading futures or Forex, you've definitely heard of prop accounts. You know they work, they're good. So in other words, that's the core problem. So TruTrade, like I said before, solves the I don't have any time, I don't have any skill problem. It does not solve the I don't have any money, or in most people's case, I don't have enough money problem. Because even TruTrade can't help you if you have $5,000 to your name to trade with. So stop trying to do it the hard way, do it the smart way, use prop. In fact, a lot of our customers don't even trade their own cash because the prop's so lucrative right now with the payouts typically, 70 to 90% payouts right now. Because most prop traders don't make money because they're not good enough to actually qualify for payouts. So those using technology like ours, or that are skilled mouse clickers, they are out there. They're doing it the hard way, but you can do it that way. They're successful. But for opportunities right now, the grass is very green on the prop side. And it's highly recommended to go that route and just speed up the process. Why make 1% or 2% per week or whatever you're making on 10? Because the average futures account is like $30,000. Average stock account is less than 6 figures. So these accounts are just too small. A lot of people, because they're fed lies by companies wanting to make a quick buck, selling them some cheap bot or selling them some sort of trading course, knowing full well the guy buying it it doesn't have the account size to actually use that knowledge.
And that's what I was going to talk about a second ago. People ask me all the time, hey, Dan, what's the catch? Well, the catch is not to over leverage. Brian keeps talking about this in all of our past episodes. If you watch them, we always talk about leverage. It's the most fundamental, most important thing when it comes to trading is not over leveraging. When you over leverage, you're trying to run before you walk. And when you over leverage, it's usually on a very small account. Like what Brian was saying, for you to change your life or for you to pay a bill, even your mortgage payment, you have to leverage a certain amount of money. If you start leveraging 100%, like if you have $5,000 and you leverage all of it, the risk on that, you're just going to blow your money, right? But if you're trading with let's say $25,000 or $30,000 of your own cash, but you're risking maybe $500 a trade, then you're going to start making yourself some money because you're not over leveraging. But we're talking about those that have $10,000, they're risking $1,500 and $2,000 a trade, and they're just blowing their accounts in half because of the leverage, their emotions kick in. When it comes to prop trading, I get questions all the time, hey Dan, well, how come everyone else isn't doing it? How come everyone's not profitable? Well, the ones that follow the rules are profitable because we don't allow our clients to over leverage. We actually try to safeguard our clients by really putting restrictions on them over leveraging because we know how important it is not to over leverage, because once you start over leveraging, your emotions kick in, then you get frustrated, you might lose, have a bad couple of losing days, and you'll over leverage to try to make up for your past couple of days. This is what most traders do. So they start attaching that gambler's mentality, which is why the prop accounts are so essential these days. If you start over leveraging yourself, you're going to start doing the same thing that you've been doing from the beginning for most of you, or for mostly all of you guys. And that's what the professionals do. That's what hedge funds do. They don't sit there and just trade a little bit of money. They're trading millions and billions of dollars over an entire marketplace. And making small bits of money each and every day very consistently over a time, not trying to sit here and hit home runs every single day, or hey, I had a losing week. Who cares? We measure things here over a month and usually over a 3 or 4 month period here at TruTrade. We don't trade any differently than any of the hedge fund or banks. We trade basically the same. So for here, we just take a lot of leverage. We take a lot of leverage and we trade very small. So we're attaching $200,000, $300,000, $400,000, $500,000 prop accounts, or in a lot of our clients' cases, they're using their own liquidity. Again, they're only trading a small portion of the cash.
Yeah, that's the other thing too. Like, this is the thing: the big institutions, they're not taking big risk. They're trading big accounts, taking small risks. Like I said before, the 1% analogy, right? Going for 1% per week is realistic on these smaller accounts. So if I use that as the perfect just baseline for comparison. So you got to remember, these big funds do the same thing you're going to be doing with our technology, but on a bigger scale. So the person trading $10,000 and the person trading $1 million, there's 100 times the difference in income, but they're doing the exact same thing. Okay, so 1% on 10K is $100 a week. 1% on $1 million is $10,000 a week. Both person A, person B doing the same exact thing. One person is living very comfortably. The other person is broke. They're doing the exact same thing, totally different result because they have a bigger account. So don't sit there and try to grind it out in your basement with a $5,000 account. It doesn't make any sense, right? Everybody's doing this. So you got to understand, most prop traders don't win because they don't have technology like this. They're just sitting there clicking a mouse, like say click, 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 right? As most of them are just gambling, because they don't have an edge and they don't have they don't have the mentality of treating this like a serious business. That's the other thing too. Most prop people are just gamblers. They're not doing the proper. They fail a lot. So these prop firms make millions off all these eval fees, and they pay the data fees, and they get funded. They lose their account a week later because they gambled to get in there. And so the thing is, these prop companies want you to succeed. They make a lot of money off the profitable people, and even more money off the losers because people don't take it seriously. So the biggest problem people have with trading is like, They act like this should be some sort of side hustle or some sort of hobby or some sort of additional income. This could be your primary income generator. If you treat it like a serious business, it'll pay you like one.
You made a really good point, and I want to touch on that really quick. So, using your analogy from a $10,000 account or a $1 million account, if you're using a $10,000 account, you're going to trade for most of the day because you're trying to get the most out of that trading day because you need to make money. When you're trading a $1 million account, you might just be trading 5, 15, 20 minutes out of the day, sometimes maybe an hour and a half. So therefore, you're taking a lot less risk. So if you're trading a smaller account, let's say you made $300, $400 in the morning, okay, on a smaller account, you're going to keep trading. Most of everyone will just keep trading because $300 or $400 doesn't change anything, right? So you're going to continue the trade through that session. And that's where the problem starts as well. Not only are you over leveraging, but now you're over trading, okay? And when you start trading with the larger account sizes, you're not going to over trade and you're not going to over leverage yourself.
Yeah, with the One AI, it just does that for them. You just have to worry about that. But if you're using the old school chart-based technology, which is still very viable, we still sell it, a lot of people like it, but we're at a point now with technology, with the AI now, you don't have to sit there and optimize. That's the other thing too. I wanted to clarify this. People think that AI is like this magic thing. It's not. What AI does is it optimizes all of these systems in real time, so you don't have to. The biggest problem with previous iterations of automation that we've sold, like the chart-based stuff that all you're familiar with, if you've used automation before in the last 5 years, is that you'd pick the instrument, you'd pick the bar size, you'd stop targets, you'd calibrate the settings based off what you're trading, your account size, and what kind of market activity you thought you were going to encounter that day. And if you did so appropriately, you'd have very good results. But if you didn't do that appropriately, you'd lose money probably even faster because you're just trading more with automation. So now we have AI to do the optimizations on the fly in real time based on the account size, the market that's being traded, and what the current volatility levels are, right? All these factors. So this is all happening on autopilot. So it doesn't matter whether you're a 20-year veteran trader or you just started trading yesterday. You get the exact same results, right? So this is important to understand that this technology has progressed to the point now, especially in the last couple of years, where your skills or lack thereof have absolutely no impact on performance. So that people are like, oh, I'm just new, I'm this and that. Whatever. It doesn't matter, right? I've got clients that don't even know how to articulate what a futures contract is, and I have people that have been trading. I've got a NASDAQ ex-floor trader that uses our software. So I mean, we have all different income levels and skill levels. None of that matters. The market does not care. What does matter is that you have an edge, which our software gives you, and that you have adequately capitalized. Which, if you have at least $250,000 plus of your own cash, which is not most people outside of a 401k or IRA, use prop. But even if here's the other thing too, even if you have the liquid cash, I still advocate prop for another reason. So the other issue with trading your own cash is that, as most of you already know, TruTrade has typically, at the time of this recording, in July 2025, we have up to 15 different rule-based systems we use simultaneously. And so, depending on the version you buy, like right now, the prop edition has 5, the pro has 10, private client's got 15. So these are different systems that run simultaneously, right? But they need to use different accounts. So if you're trading just like your business account or a personal account, you only have typically with most brokers 1 account per tax ID. So you can't go long and short the same instrument at the same time because you're going to offset and go flat. If you're long a 10 lot on your, let's say your brokerage account but for your business and you go short a 10 lot, you're going to offset and go flat. But if you got a personal account and a business account, one's long 10, one's short 10, you could be delta neutral for a moment in time, but you can still, both lags unwind properly, right? The long could be in on a trend and the short could be scalping the pullbacks without abandoning the long trade. So it takes a profit on the dip and then shoots back up and you take a profit on the rise as well.
And I'm glad you brought that up. And Brian's going off on a tangent there, but what's really important about what he just said is, because we're talking about prop, is that if you have a smaller account, you won't be able to trade the way that Brian was just explaining because you're only able to trade one side of any asset. When you have a certain amount of liquidity, you're able to trade 5 or 6 different asset classes at once, different positions, different type of strategies, all simultaneously. But when you have enough assets to trade multiple asset classes and you're trading different types of strategies simultaneously, this is where the hedging comes in. And you can only do this by having a certain amount of liquidity. And this is what we keep going back to. The prop accounts are extremely important. I mean, even if you have $500,000 or $1 million and you want to trade, that's okay. You can still trade that, but why not leverage another 5 or 10 million on the side? Most important thing here, the takeaway from this podcast would be not over leveraging and having enough assets to trade appropriately. So you're not going to overtrade, and you're not going to invite emotions into your day-to-day trading. Whether you're using our automation or not, you still have the ability of turning the bot on and off. Okay, so you're going to turn it off. Just a human being will just turn it off when you feel stressed, and you only feel stressed is when you're trading outside of your comfort zone. Okay, so that's why the prop trading is so important, because you're not going to have that feeling every day when you're trading. So when you know that, you're going to leave the systems alone. You're going to allow them to trade, and over time, you're going to build a very good habit of okay, well, this is how we actually trade. Even though we're day trading, we have systems that swing, we have different systems that do a lot of things, but at the end of the day, we have to allow our strategies to play out over time, whether that be a week, whether that be a month, whether that be over 3 months or a 6-month period. You have to allow the systems to work. Okay, and that starts by properly allocating a certain amount of funds towards your trades.
Yeah, so what I was saying before was, the other reason for prop is diversification. See, all the big funds, they're not just using one account. They're using multiple accounts of the same tax deed, sometimes, over 100 accounts. So when you use multiple systems, let's say one's up, one's down, one's up, one's down. Let's say there's 10 systems and 7 of them are green and 3 are red. Your total for the day, when you add them all together, is still going to be well into the green. So any losing trades just get swallowed up in that sea of green. If you're just using one account, you have to pick one system. You're still going to make money over the long haul, right? But you're going to have a lot more volatility in that equity curve. So you're going to have more red days than you would have had you use 10 different accounts, 10 different systems.
Right.
So again, it makes it psychologically a lot easier to deal with, right? We want to trade in a way that doesn't rock the boat too much. I kind of use like the flyer analogy, right? Infrequent flyers, a little bit of turbulence, they get nervous, they get rattled. If you're a professional flyer, you fly 100 times a year. If the flight attendant's not worried about it, neither are you, right? So a little bit of turbulence is totally normal. But new traders that don't know, they think trading is just all green. There's no volatility. It's all just smooth sailing. The pros laugh at that statement, but we have clientele from all different walks of life and different experience levels. So we want the software to be used in a way that's psychologically easy, like I said, low stress. So we trade multiple accounts with multiple systems to give you that smooth equity curve. That's how you do it. So if you're clicking a mouse, you only have 2 eyeballs, 2 hands, 24 hours on the clock. There's only so much you can do in a day. Most people are trading by hand can only watch 2 or 3 screens at most. Where the software is trading sometimes up to 20 plus accounts, per tax ID. So you can literally take props, start off with a couple of 50K accounts, leverage this to dozens, potentially even over 100 prop accounts from over a dozen different prop firms, and just keep scaling this. So, like I said, whether you're walking to work or have a private jet, it doesn't matter. Prop is viable for everybody right now because most people don't win. The payouts are still very high. My projection is that over the next 3 or 4 years, as more people adopt this type of technology, the success rate of the masses will go up and the payouts will therefore probably go down, right? So instead of getting 90%, you're getting 50%. So right now the grass is super green. Now is the best time there probably ever will be to get in on the prop scene. So whether you want to trade your own cash or not, or you have to use prop, definitely use it. Definitely increase your leverage. Like Dan was saying, your max risk is the cost of admission. An eval fee and a data fee. That's it. Typically, you risk $200 to $300 max per account. If you use your own cash, you draw $1,000. You lost $1,000. You draw down $1,000 on a prop. The max you're losing is the cost of entry. So the main thing is that prop is harder to do by hand than trading cash. But with the correct software and the correct edge, it becomes a lot easier to pull it off, right? So that's what we're trying to convey here. And so the bottom line is that using prop can significantly increase your bottom line. It's a high leverage, low risk situation. And when you know what you're doing, it's very, very, very lucrative. So it happens to pair very well with software like ours, right? Where we sell, because most traders don't have any money, they don't have enough time or enough skills. So they have 3 problems.
Right.
That's why, because trading is, let's face it, guys, clicking a mouse, trading by hand is difficult. It takes years of grind to get good at it. And a lot of people just don't want to admit that, that the technology has replaced them. I'm a phenomenal trader by hand. Our technology is better than me. It is what it is. That's where we're at with the tech. So we're trying to convey to you that the technology now with the AI is good enough to where learning how to trade is no longer necessary. It's optional, right? And having the time and even have to be in front of the computer at all is optional. So we have tech now that doesn't require you to be in front of the computer, doesn't require you to have any skills. It just automates itself. It's basically a plug-and-play solution. It takes 2 or 3 minutes per week. And then you pair that with prop accounts to get the trading capital, and you have the perfect storm, like I said before.
Yeah, in fact, I would say, I'm going to throw a number out there. I'm thinking probably maybe 70% of our clients now have never traded before, which is absolutely fantastic. And that's what Brian's trying to convey. A lot of times, traders they've been trading for years, and they bring that negative aspect to the table, when basically all you have to really do is just turn the software on and just let it work on its own. And that's pretty much where you're going to have more of a positive result from. Those that bring in all their bad habits to the table, they're constantly going to introduce those habits within their day-to-day trading experience. But I think we covered a lot, Brian. I think do you have anything else to add on prop trading? Yeah, I think we're good.
Basically, if you're skeptical about prop, never heard of it, take the time to look into it, talk to your sales rep, ask them to send you some of the prop websites, go there, understand it, because if you're not using it, you're just doing yourself a huge disservice. You need to use it to get more leverage, because like I said before, this business is with the typical futures accounts less than 30K. So that's not enough money to make any real difference in your life to trade safely. The pros get a small, safe, consistent return off a huge pool of money. The amateurs go for a big return off a small account. That's why they lose. That's why the pros win. So use the same strategy as the pros. Use the software to give you the edge, and use the prop accounts to give you the capital, and take advantage of the technology we have out these days. I mean, like I said, a lot of people just don't realize how far things have come in just the last 24 months.
I know it's.
You've seen AI already permeate most areas of our lives. Over the next couple of years, it's going to be everywhere. Every part of your life is going to be infused with AI to some extent. So take advantage of AI to trade the markets. Use prop cash to get more leverage, and get your share.
Great. Thank you guys for watching. To talk with Brian or myself, visit TruTrade.io. That's TruTrade.io. Fill out the form and click the Let's Get Started button on the website, and let's have a conversation. Thank you.